revenues amount to about 1/3 of its GDP, whereas in Sweden it is closer to half. There are some who believe any tax is a bad tax, but public goods and government activity need to run on something.
My name is Stephen Smith, and I've written Taxation, a very short introduction. Here are 10 things that you should know about taxation. First, however much we may resent having to pay them, we need taxes to pay for public services. Second, taxes are often at the heart of political controversy. Tax policies can win and lose elections. Tax policies or taxation can spark major political change. You only have to think of the way in which the Boston Tea Party became a symbol of the American Revolution, or the Salt March that Mahatma Gandhi led became a symbol of Indian resistance to British colonial rule. 3. In most industrialized countries, the level of taxation has grown dramatically over the last century as the role of the state has expanded. In European countries, taxes now take, on average, about 2/5 of all national income, and in the United States, about 1/3 of national income. Fourth, nearly all countries raise the bulk of their revenues from a small number of very large taxes. Most countries have an income tax, a value-added tax or other sales tax. Most countries have a payroll tax, which typically finances social insurance benefits or perhaps health service. And most countries have a tax on corporate income or corporate profits. But the details of these taxes vary widely between countries. And in most countries, there is plenty of scope for rationalisation and tax reform. 5. Who bears the burden of a tax can be very different from the person who has to pay it. Economic processes determine where the burden of a tax is ultimately borne. For example, whether or how much of a tax on the sale of goods gets passed on to the customer in higher prices, or whether a tax on housing rents is borne by the landlord or by the tenant. These are determined by economic processes, and there's not much that the law can do to alter the fact. 6. Taxes have the potential to alter economic behaviour. They can influence how much we work, what we spend, how much we save, and so on. These distortionary effects can be a significant cost to the economy, and a good tax policy will aim to minimise the scale of the impact of taxation on economic behaviour. 7. Very few taxes, however, raise revenue without distortionary effects. A century ago, the American political thinker Henry George advocated raising public revenues from a single tax on land values. That wouldn't be enough nowadays, but it nonetheless remains true that taxing property, a well-designed tax on property, is going to be one of the most efficient taxes in the tax system. 8. Effective tax enforcement is ultimately in everyone's interest. Widespread tax evasion can distribute the tax burden very unevenly, and tackling tax evasion can impose heavy costs on honest and dishonest taxpayers alike. 9. The most effective route to tax enforcement is to take the temptation away from taxpayers through systems of deduction at source, like the UK's pay-as-you-earn system of income taxation. By contrast, tax systems that rely on taxpayers to declare their income or spending honestly tend to be exposed to much greater evasion. 10. Couldn't the tax system be made fairer and simpler? Well, it's a seductive idea, and there's certainly plenty of scope for beneficial tax reform. But there's no single right answer. Tax policy is ultimately a very political issue, bound up with different views about what is fair and just.
that we can use to develop our organizations and impact on our clients. As we begin this session, I would like firstly to recognize Mr. President, who is there and who will definitely be the one to call this session to order. Please may welcome our Mr. President. Tade, wherever you are, online and in person here, can we please welcome him warmly as he comes to the podium. Welcome, Mr. President.
Thank you very much. Our governor, Rotary, Governor of Lagos and Ogun. Thank you, Mr. Bola Oyebade. It's an opportunity for us to be here to talk about tax. Most of the companies in the last 6 months or so, despite COVID, Federal Inland Revenue, Lagos State tax collectors, they did not leave us. And I know most of us are still battling it. So for us to understand it better, that is why we said we should organize this kind of forum for better understanding. I welcome all the Exman members to this gathering. I know it's been tough, business-wise, but as usual, as Nigerians, we trust in God that things will change for the better. It shall be so. Thank you very much. So I hand over back to Bola Oyebade to continue the program. Thank you.
Thank you so much, Mr. President. Without wasting so much of our time, I want to believe most of us were privileged to view the tax video that relayed earlier on. But to give us better insight into what we are doing today and give us better understanding, it's somebody professional by all means, is Mr. Oluseyi Arowolo. I'll just quickly give a little brief of its profile so we can understand the kind of quality that we at Exman Training has provided us this morning. Mr. Oluseyi Arowolo is a 1985 set of Powys House Government College Ibadan. He was the best graduating student from the Faculty of Law of Afemawolo University Ilefe. That was way back 1997. A Petroleum Technology Development Trust Fund scholar. He obtained his LLM with distinctions in energy law and policy in the year 2004 from the University of Dundee's prestigious Center for Energy, Petroleum, Mineral Law, and Policy. He's a legal and chartered tax practitioner with over almost 2 decades years of experience in professional services. He became a partner in the tax and legal function at the young age of 38. Yes, thank you very much, Oloshe. Thank you. He's a member of Nigerian National Tax Policies Implementation Committee since year 2017 till date, whose work culminates in the promulgation of the Finance Act of year 2019 and 2020, which law made far-reaching significant amendment to the Nigerian excise tax laws. He's a fellow of the Child Institute of Taxation of Nigeria, that's FCTI, a fellow of the Center for International Legal Studies, Austria, and member of the Nigerian Bar Association. He's a member of the Nigerian Chartered Secretaries and Administrators, an associate member of the Business Recovery and Insolvency Professionals, and fellow of the Institute of Agricultural Management of Nigeria. With over 22 publications in international journals on taxation and regulatory matters across different sectors of the Nigerian economy, he is a principal editor of the Deloitte Inside Tax column for 3 good years consecutively, producing and editing over 156 articles in that period. He's a volunteer facilitator at the Faith Foundation on taxation and its implications for the Nigerian business environment for their annual scale-up programs for small and medium-scale entrepreneurs. He represents Deloitte West Africa on the board of Junior Achievements Nigeria and is a regular columnist with the National Infinity magazine under the title Saturday Lifelines. Infinity Life magazine, by the way, is an online publication platform. He also has other activities out of professional life, part of which I will just quickly mention. As an old boy of the Government College Ibadan, he became active in the affairs in 2012. And in 2016, he became the 3rd chair of the 1985 set. He was re-elected unopposed in 2018 for a second term of 2 years. And successfully, he midwifed the transition to a new executive of the SEC sometime in February 2020. He's a co-producer of the Legends of the GCI interview series project, a fully self-sponsored passion project through which he and many others try to amplify and promote the heritage of the Government College Ibadan by promulgating the exploits of its alumni. Mr. Olusheye and others are quite heroes, and he has been present and coming generations via an enduring platform that is easily transformable or accessible online. He has interviewed far more than 25 legends of the GCI, that's the Government College Ibadan, living and falling, with a video available on the GCI Museum. He currently is the National Financial Secretary of the NEC of that same alumni. He has been privileged also to win various laurels, awards, and recognition for selfless service in the school. Part of these service awards you might want to know includes, but definitely not limited to, Special Appreciation Award, the GCI OBA 2005 set, that's in the UK Charter, when he was studying in Dundee, UK. Outstanding Leadership Award from GCI OBA, Certificate of Award from the same school, and when he was the chairman, he was able to set and inducted into the Lagos Branch Hall of Fame with a Merit Award in the year 2017. You might want to wonder what this man also does when he's not being professional and developing his alma mater. I make bold to tell you that he also is a humble Rotarian. Rotary at some few years back, precisely 2017, when it was introduced by another very good friend of his, of the same school. He was able to pitch tent with the Rotary Club of Maryland, Ikeja, Lagos, District 9110, Nigeria. And in that particular club, he also has exemplified leadership traits that made him to be exemplary in the service to humanity. Since his induction in 2007, he has served in diverse capacities, some of which include, but definitely not limited to, being the chair of Basic Education and Literacy Committee, and that was in 2018-2019 Rotary year. He also was the chair and director of Membership Committee in the year 2019-2020. And in that particular year, he was able to bring into the club over 20 members, 20 guests that eventually became Rotarians. And under his tutelage, he was able to mentor them to becoming very good Rotarians. He's currently the secretary of that club, a club that consists of close to 100 members in Lagos State and Ogun State. He's married, of course, and he has kids. He lives and works here in Lagos. As mentioned earlier, he's a partner with Deloitte. Please, wherever you are, in person or virtual, please make welcome Mr. Oluseye Arowolo. Thank you very much.
Thank you, Mr. Bola Oyebade. For avoidance of doubt, the current DG, District Governor of District 9110. Distinguished professionals, I'm highly delighted to be here. It always delights me really to engage on a constant conversation around tax. And I want to thank the management and the executive team of the Experiential Marketers Association of Nigeria for giving me this privilege to engage with you this morning. I won't say that I like to do presentations, I like to hold conversations. And I would like to also cut to the chase very quickly. The topic I will be speaking on this morning is Nigeria's tax landscape amidst the pandemic. Now, the structure of my conversation with you this morning is along three definitive points. The first one is to look into the journey. How did we get to having the kind of tax landscape that we have currently in the country? The second thing is to look at the primary legislation that has shaped the country's approach and response to the issues created or triggered by the pandemic, and to conclude on what we think each entrepreneur or business entity or organization needs to do within the realities of the current tax landscape. Can we have the slides, please? So let me, okay. We are trying to reposition the podium. Okay, so that people could see. So let me quickly shoot. So you will recall that in 2014, tax suddenly became the child of necessity because Nigeria experienced diminished revenues because of the crisis within the oil and gas sector. And since 2014 September, it became clear that government needed a source of revenue that is not as volatile as what we typically get from the oil and gas sector. The then FRS and other tax authorities embarked on a very, very aggressive tax awareness program to ensure that we can expand the tax base and get as much as is possible through tax. So I was saying that so that we could get as much as possible through taxation. Now, when you look at non-oil revenue sources, there are two primary elements of non-oil revenue sources. And it is between taxation as a direct levy on income, profits, or transactions, and customs revenue. So the reality at 2014 and 2015 and 2016 up till date is that the most preeminent or the more preeminent source is the taxation aspect of the non-oil revenue. So when this year the federal government came up with the budget that was titled Budget of Recovery and Resilience, that also suggests to us that there is an economic context in which the conversation around taxation takes place. You cannot be talking of recovery, you cannot be talking of resilience if your economy does not have the capacity to respond to shocks that must naturally come. Now, based on the distribution of the budget and the revenue sources this year, about 70% of this year's budget is expected to be funded through non-oil revenue sources. And that already raises the specter of the kind of drive that the Federal Inland Revenue Service, the State Internal Revenue Service, and the Nigerian Customs Service are going to embark on. So fast forward, or let me say in 2017, the Minister of Finance decided to be a bit more structured in the way we approach the issue of increasing our take through taxation. And one of the things that she did was to admit that for several years before 2017, we had not engaged in a review of our tax laws in such a manner that tax administration could be very smooth and easier for tax collection. In 2014, the Chartered Institute of Taxation of Nigeria raised a very significant context around that point, which I believe, kudos to them, dovetailed into the activity that led to the Minister of Finance then, Mrs. Kemi Adeosun, to see the need to set up what she called a National Tax Policy Implementation Committee. And the whole idea is this. There are three pillars on which tax administration stands. You have the policy, you have the law, and you have the authorities that are empowered to assess, to collect, and to enforce the assessment and collection of the tax. Now, if you have a law that does not speak to the assessment, that does not speak to the collection, that does not speak to the enforcement of what needs to be assessed or collected, then that means the tax administrator, which is either the Federal Inland Revenue Service or the State Internal Revenue Service, is already shackled in the way it is expected to go about that business. So the committee embarked on an holistic review of our laws, which were not being amended as and when due to meet the economic realities of the country. Now, one thing that you also need to appreciate is that there was a particular practice that the military government left us with, which were discarded after the military government, after the era of the military government. And that practice is that whenever you have a budget being read, that budget is accompanied by a finance act, which is typically the finance, miscellaneous, whatever of taxation of those days. That there is always a finance act which speaks to, okay, you have a budget of 10 trillion naira. How do you intend to fund this budget? That kind of practice was not immediately taken up by the civilian democratic government until 2017, 2018, 2019. Now, the activities and the efforts of the National Tax Policy Implementation Committee was what dovetailed into having a finance act in 2019. Now, in that act, about 7 of the tax laws were looked into. And one of the things we did when we are at that committee deliberations was that, what are those things that either based on the case law, either based on different courses of interactions and engagements with the tax authorities, some particular principles are already settled. Those do not require any form of legislative, maybe a separate or extrajudicial legislative interaction with the National Assembly for them to be accepted by taxpayers and by the tax authorities. These provisions were brought into the Finance Act 2019. Now, you will notice that almost immediately that the Finance Act 2019 was passed, the issue of the pandemic gained currency. So the kind of fiscal optimism that we had at the beginning of 2020 just evaporated because we realized that the pandemic is probably going to disrupt a lot of flows within the economy. And you will notice that the government also tried around between February and March 2020 to try and come up with what they call an economic stimulus bill, which was not eventually passed. But at the end of the day, what you saw was a lot of the authorities that were involved in enforcing one thing or the other, the CBN, tried to come up with initiatives to respond to the implications of the pandemic in relation to businesses and or whatnot. Now, in terms of, I hope that provides a kind of context to the issue around the Finance Act and how we got to where we are. So our journey actually started in 2014, and by 2019, we agreed that at any time in this country that we will have a budget, the public, business owners, entrepreneurs, prospective and intending or existing, need to understand, need to know, need to have an awareness of how the government is looking to fund that particular budget for that year. So if you look at the highlights, the Finance Act 2019, the Finance Act 2020 are the primary instruments that have shaped Nigeria's response, Nigeria's approach to the issues affecting players within the different economic sectors of the economy in Nigeria. And I would like to take you through some of the rapid objectives of the Finance Act 2019 and also the Finance Act 2020. Quite a number of the provisions and the changes that were brought into this legislation, some of them are very technical. And what I'm going to do is to touch a few of those things and go straight to my conclusion, where I tried as much as possible to highlight the kind of things that I believe people in the Experiential Marketers Association of Nigeria should be thinking to do if they have not currently started to do them. So when you look at This is blurry. So when you look at the Finance Act 2019, there are 4 primary objectives that informed the approach taken under that legislation. The first is to raise revenue for government. We did not delude ourselves that it was going to be philanthropic in approach. We were very clear that government should, regardless of whatever concessions that the Finance Act 2019 is going to give to taxpayers, it has to be give and take. If you are losing revenue by reason of the fact that you are granting exemptions or you are granting tax holidays in certain other provisions, we should also be able to see some corresponding accretion to the revenue that the government is looking to have. So in terms of raise revenue objective, you will notice that in 2019, under the Finance Act 2019, the VAT rate increased from 5% to 7.5%. One of the key development under the Finance Act 2019, which also we believe will potentially increase the raise revenue objective of the government, is harnessing the digital economy. And I must confess to you that about, I think that was 2014 or 2015, I had a session in Ilorin with, I think it's either CITN or ICANN. And we were looking at taxation of e-commerce transactions. There are quite a significant number of online companies that are making supplies into Nigeria, and most of the revenue or the taxable revenue that should have accrued to Nigerian government are escaping. And in fact, as at that time, the way the estimation then was like there is a $20 trillion jackpot. And if care is not taken, Nigeria may not really have a share in that. That was 2015, 2014 discussion. So one of the things that the Finance Act tried to do, without going to any robust detail, was to try and say that we will have a provision around the digital economy. The second thing was excise duty on imports, which, regardless of how you look at it, that look, this particular item that is being imported should actually have been produced in Nigeria. So if you continue to indulge in importing something that you can set up a factory or a plant to produce in Nigeria, we will assume and impose an excise on it. So in a way, it is to raise revenue for the country, but it is also to discourage or to incentivize the people that are importing to create a plant, to create a factory, to produce the same thing, such that they could also contribute to resolving the unemployment rate in the country. Of course, withholding tax on petroleum profit. Up till 2019 Finance Act, dividends distributed by IOCs or other companies engaged in exploration and production in Nigeria were exempted from petroleum profits. You can imagine. So it means that up till that period, all the distribution of dividend by the Shells, the Mobils, the Chevrons, the Ajib, of this world had gone without any form of tax being levied or enjoyed by Nigeria. So that is those are the points or elements around raised revenue. In terms of mitigation of regressive rules, anytime you see taxpayers discuss taxation, there are 2 issues that typically come to their minds. They will talk about multiplicity of taxation as a problem, which is one. Secondly is double taxation. So one of the provisions of the law that had worked hardship, of the tax law, that had worked hardship for businessmen, for investors, for taxpayers in Nigeria, was the dreaded, notorious Section 19 of the Companies Income Tax Act, which we typically call in our own technical parlance the Essex dividend tax. So part of the work that was done that also got into the Finance Act 2019 was to mitigate the exposure of income of profit, to mitigate the exposure of taxpayers to that particular rule. And it was amended and ameliorated such that once the income or the profit had suffered tax before, the FRS cannot come at you if you decide to defer the distribution of the dividend and say that, okay, because you have now distributed the dividend this year, you should now face XX dividend tax. Then, one of the immediate things that the Fowler FRS did in 2015 was to invoke a particular section of the Companies Income Tax Act on taxation on interim dividend, which used to be a kind of dormant provision before then. So one of the things we felt that this is a disincentive and this needs to also be taken out. So tax on interim dividends was also removed. Then the issue of the minimum tax rule, that was also changed. That look, even when a company is making losses, you are still saying it's supposed to pay a minimum tax. That also needs to be looked into. That look, if the guy is making profit, it's understandable that the general rule or the rule of thumb is that tax follows income or profit or the transaction. So if somebody is loss making, why are you compounding his problem by saying that he must look by all means to pay tax? And again, what are you really charging your tax on? Is it the net assets or the capital of the business? So those are some of the things that were considered and said, look, this thing has to be dealt with. Of course, tax rules for new and exiting business. Now, the rules, I don't know how much you are familiar with what is called the commencement rule and the cessation rules. Now, it is possible that when you are commencing your business in the first 3 years, there is a rule that dictates that no matter how you do it, in the course of the 3 to 4 years of starting or commencing business in Nigeria, part of your profit is going to suffer tax twice. So if you had paid, let's say $20 million, let me use 20 million naira, before some people think I'm so much more in love with dollars than naira. So, so if you had paid, let's assume you had paid 20 million naira in 2019, and that was your 3rd year. It is also possible because of that rule that even for your 2nd tax year, if you had paid 20 million naira, you probably pay 20 million naira again on the same particular revenue because of the way the mechanics of computing tax returns under that rule work. So we felt that that should not be. Even when you are exiting, the cessation tax returns are meant to be prepared for penultimate year and not the ultimate year. So depending on which one is higher, the FRS will choose which one on which you will pay tax on. So those are some regressive provisions of the then tax law that we felt the Finance Act 2019 should address. In terms of incentivizing businesses, we felt that it is important that the medium, small, and the small, medium enterprises are the bedrock. In fact, they are the greatest employer of labor in Nigeria. In fact, somebody called them the bottom billions. So that they have not been properly incentivized in the law. Because when you look at most of the benefits of our tax regime, they seem predisposed to somebody who sets up as a limited liability company than someone who sets up as an enterprise. So we felt that there is that discrimination or disadvantage to those who are operating as enterprises and who are the many that even engage majority in terms of creating a platform for clean and honest living for them, that there is a need to encourage them. So a preferential tax rate was proposed and adopted for them. One other issue is the issue of VAT. We felt that it is the VAT registration should not just be for all and sundry. Let there be a threshold. Let there be a turnover threshold that puts you within the bracket for registration. So the idea of a registration threshold of if you have a turnover of 25 million in a year, was also proposed and adopted. Then there was the early CIT payment incentive to say, okay, we used to have a bonus in those days before 2007, but through 2007 amendment, that was removed. So we thought of bringing that back. There are some particular businesses, there are some particular Nigerian entrepreneurs who actually see it and hold it as a civic duty to pay their taxes timeously. So let there be a form of incentive that can continue to encourage this good behavior. Then there was that issue of, oh, should there be capital gains tax on loss of employment? So if they give you a terminal benefit or severance package, should you be paying CGT on that amount, even if under the Personal Income Tax Act you have been exempted? We needed to at least remove that controversy. So the idea of a CGT exemption for loss of employment compensation was also introduced and adopted. And in terms of reform of the law, we felt that it's high time within the country that we have a thin capitalization rule, because we adopted transfer pricing regulations in 2012. How could we have adopted transfer pricing regulations in 2012? We had an amended act in 2018, and we will not have a corresponding provision in relation to thin capitalization, which is also to regulate the extent of borrowing that can happen between related parties. So that was also introduced. We also created a framework for security lending, pass-through status for real estate units, and anti-avoidance provision against artificial business restructuring. So if you look at the slide after that, I think somebody is. Can you go back to? Go up. Go up. Can you go back to slide 3? Slide 3. Yes. Yeah. Oh, yeah. Come back. Come back. Yes. So you can see clearly. You can see. Okay. You can see. Okay, no problem. Thank you. So you can see clearly, these are the highlights of the provisions that were brought in by the Finance Act 2019. I've touched on the dividend tax. I've touched on the thin capitalization. I've mentioned the issue around the minimum tax, commencement and cessation. Now, withholding tax on construction. This is heartwarming, because I remember that during the Yaradua years, there was an attempt, and I need to dilate about this. And dilating about this is to also say to the Experiential Marketers Association that there is an advocacy responsibility that you should not neglect. Now, the guys in the construction industry, they engaged us, Deloitte. When I say us, they engaged Deloitte in a conversation. That conversation was led by Julius Baja, who then is our client. So, and what they put on the table was that the 5% withholding tax on construction contracts is even higher than their margins. In which case, they will be in a perpetually refundable position. For instance, if the withholding tax is higher than your margin, it means you will continually pay excess tax with the government. You will never get to a taxable position where you will relieve your taxation with those excess taxes that you have paid. You know, the way the withholding tax works is this. If you compute your taxable tax liability for this year, and let's say it comes to 20 million naira, or let me use my favorite figure, 100 billion naira, because that's what I'm targeting. That once I have 100 billion naira, I will stop working. Now, how I will get it, I don't know. So let's assume that your tax liability for a year computed is 100 billion naira. And over the years, you have paid, or you have with the tax authorities, an excess tax of, let's say, another 300 billion naira. Under the normal ideal scenario of relieving withholding tax against your tax liability, you have sufficient withholding tax or excess tax to consume the 100 billion. So you don't need to part with cash to the tax authorities anymore. That is how it is supposed to work. So in any year that you continue to have more withholding taxes than your tax liability, you should be able to relieve it. But you can imagine a situation whereby there is now no year that you don't continually generate more withholding tax payments to the withholding tax credits with the authorities. So there is no year that you can say you will be able to utilize everything. So, and that was the situation, because most of those companies at times actually become loss-making. Don't also forget that the withholding tax credit is an asset in your books. Even losses are also assets. So, so you are unable to relieve either, because the only time you can relieve the withholding tax credit is when you have a tax liability to pay. And when you have losses, you continue to carry forward those losses almost indefinitely. So it also rests as an asset in your books. So the guys in the construction industry, they came up and said, look, we need to have an engagement with the tax authorities to say, look, guy, we think the 5% withholding tax on construction contracts is not ideal. We can accommodate a 2.5%, which will ensure that at least we can use the ones that we have already compiled or piled up with you. So during the Yaradua days, that lobby became successful. 2.5% was issued for them, even though it was reversed much later. But one of the things that we did was to bring that back in the Finance Act 2019 to say, look, guys, these guys, we know that they are engaged primarily with the public sector. And because they are engaged primarily with the public sector, most of their problems are triggered by the public sector. The public sector also needs to feel their pain and respond appropriately. So where I'm saying this is this, that most associations neglect this fiscal or business aspect of their members' challenges, or probably they think they do not have help, or probably they think that they cannot engage the government for a change, or they don't think the government is going to act. I must confess to you, all those kinds of concerns and trepidations were also nursed by the construction professionals or the construction companies, but they were not deterred by them. Let us put this on the table. By the time we keep putting it on the table, at some point, somebody reasonable will hear and will want to look into it. So, peradventure, sir, maybe there are certain aspects of your fiscal environment, of your business, or the businesses represented by this organization that you think there can be improvement. I think it's important that we have a kind of proposition around it. Let's have a conversation around it. Let us define how to approach it. Let us define how to engage, whether it's with the State Internal Revenue Service, if the predominant members are with the State Internal Revenue Service and there is a fiscal issue that you think you want to engage them on, it's important that they said a closed mouth is a closed destiny. So, of course, then tax exemption for agri companies. You see, and I must confess one point here, sir. The point I confess is that for the first time, and I'm not sounding patronizing, I don't want to appear to have patronized the current government of the day, but where they have done something that is worthy of commendation, one should recognize it. Now, this government, in a very long time, is the government that has interrogated parameters that have stopped Nigeria from moving forward. And you can see a linkage in their thinking and their policy and their actions. For instance, the ease of doing business. Do you realize that there's no year that the World Bank does not, does not interview me, my CEO, my business unit leader, on what exactly is happening in the tax space? So, and that is what they do across all the Big Four professional services and also some notable indigenous professional services firms in Nigeria to get their views. They also go to people that you don't even know. World Bank send people on the ground. Even whatever we tell them, they still cross-check it with the field. So you can imagine a situation whereby, despite all of this, we will complete a questionnaire and Nigeria will be ranking 171, whatever. What is happening? Until the ease of doing business team began to engage us, to educate us about each of those metrics that we are completing. We didn't realize how it is translating into the ranking. Now, with better understanding of what they are looking for in those parameters, we were able to give a more realistic approach. Because the way we were responding before was as if we were responding to give an assessment to the Nigerian government. So most of the feedbacks in those areas were tending to the extreme rather than being a bit more of a middle ground responses. So, and that is ease of doing business. Now, the government adopted this agricultural policy in relation to diversification. This is not the first time we are adopting a policy on agriculture, but this is also the time where government is elevating those provisions that speak to the kind of fiscal benefit that any entity that is involved in agro-allied business can benefit from and enjoy. So companies engaged in agricultural production can enjoy an initial tax-free period of 5 years, subject to an additional maximum period of 3 years. That is about 8 years. So you can imagine if a cluster of people come together to engage in some form of agro-allied. So for 8 years, government is saying direct company income tax on your profits can be exempted for about 8 years. That was under the Finance Act 2019, but of course there was a modification slightly in 2020. So the minimum tax rule modified to exclude taxing capital. You can't be taxing capital. That was the point I was making. The commencement and cessation rule modified to eliminate overlaps and double taxation. Now, SARS, let me just drop this. You know, I mentioned that multiple taxation. Multiple taxation is a structural problem. It is a structural problem because of the way our tax system works. But again, can it be ameliorated? Yes, it can. Have we done enough in that area? Yes, we haven't. And it's a conversation that really needs to continue to happen so that the 3 tiers of government that are looking to the same revenue to tax and enjoy through levies and fees can have an accommodation on that. Then withholding tax exemption on foreign loans. There is also something that is now limited to 70%. You know, typically there was one, when you look at the table, it used to say that once you have 7 years tenure of the loan, moratorium of 2 years, you are entitled to 100% exemption from withholding tax. But this has been restricted to 70%. Let me quickly run. Obviously, one of the other things was non-resident companies that have been operating in Nigeria. Some of them without having paid any tax for the last 30, 20, 40 years. And I will tell you that there were a large number of discoveries that the voluntary assets and income declaration scheme brought about VATs. There were companies that have been, by the time we were trying to support them to regularize their position, you could imagine what Nigeria had lost. And the way you can appreciate what Nigeria had lost before VATs was when you compare the Naira revenue to the exchange rate. So you have an idea of how so at times when the tax administrators become very aggressive, it's as a result of situations that you feel should not have happened. Of course, micro, small, and medium scale enterprises, preferential CIT rates, then also zero CIT for small and micro businesses. So if your business fall under the micro, you are not going to pay any. I think this is a very good incentive for our business. Of course, business restructuring, 1 year minimum legal existence required for tax-free business. So there are times when people actually do, we call it Section 29 restructuring. So Section 29(9) or 3 restructuring is such that you can decide, because you want to take advantage of a tax benefit and restructure your business. So what this one is saying is that, so that it's not just tax-driven restructuring. We want to see that business, you understand, after it has been restructured, we can see it for 1 year and it's not paying whatever taxes or whatever it's doing, that it's not just validated by taxation. Of course, VAT, like I mentioned, there was increase in the rate. Now, the issue of definition of goods, expanded definition of goods now covers intangibles. So, you know, before, and you remember the Sinnoh case, the issue was that there is no VAT on intangible. Now, we have coded it now in the tax law to say in the Finance Act that intangibles are also likely that they are going to also be vatable. Then destination principle. So in as much as it's consumed here in Nigeria, no story you are going, and that is also been advanced in the Finance Act 2020 when it says if you make taxable supplies to Nigeria, look, you are going to create a digital significant economic presence. VAT self-accounting, Nigerian companies to self-account for VAT where the NRC does not include. That has always been there, but now made much more powerful. Exemption list expanded many of basic food items, because people continue to ask you which one is exempted as which one is basic food. You know, that kind of stuff. So cash-based rule, remittances to be based on actual collections, because there was this issue of whether VAT should be on accrual or on cash. So we have said that, look, it's only when you collect the cash that anybody should aim to collect the VAT. We believe that the accrual rule is punitive. Then registration threshold, as I've mentioned, of course, the issue of penalties have also been increased. Likewise, when you go to the Personal Income Tax Act, we have some provisions there also as well. Then for the CGTA, excise duties, I've mentioned that the stamp duties, all of us are familiar with this one. Once you do transfer like this, the next alert that you see. So we are all, so, but now, let me also say this. You know, I was saying that this government has done, can you believe that this government, and that's why I'm saying that there is a thinking and there is a linkage in action. You see a situation whereby relevant legislation that drive the economy that should have been, you know, periodically reviewed or amended have not been done. That kind of exercise had not been done for years. Take the Companies and Allied Matters Act. Since 1990, nothing was done. But this government did that, you know, reviewed it and came up with the Companies and Allied Matters Act 2020. A lot of our laws that should have been amended and reviewed in the past, this government has done so. And it's in line with some of the thinking that is informing their policy. So you can imagine in the Finance Act 2020, you know, in Finance Act 2019, we said only 7 tax laws were touched. In 2019, in 2020, about 13 laws, you know, were reviewed and provisions made in them. And one of the things that they were also trying to do is also to establish a crisis intervention and unclaimed funds trust, then also to provide palliative. So the objectives of the Finance Act 2020 was to promote reforms around ease of doing business. I mean, the Exman members can tell us whether they enjoy doing more business in Nigeria now or not, because one of the hanging questions, and I must confess to you, yes, sir, one of the hanging questions at the end of 2020, by the beginning of 2021, was to what extent did we conduct what is called a monitoring and evaluation of the initiatives of the Finance Act 2019 to come to a conclusion whether or not these initiatives delivered on the objectives of government. For instance, if you say raise revenue, how much marginal difference was recorded by government at the end of 2019 or at the end of 2020, beginning 2021? So, I mean, the jury is still out if that exercise had been done. People called me to say, but you guys suggested that there should be study. Well, we have not seen any study that came out to say this is what has happened. Then the objective of the 2020 introduce new public procurement reforms to encourage transparency, provide legal framework for crisis intervention in Nigeria by the government to provide fiscal relief for the mass transit sector. Let me just, so all the other slides deal with the highlights of some of the things that the government wanted to achieve and the provisions, their implication for our business. So I will quickly rush to, because my time is up, I will quickly rush to what was the conclusion in terms of what should Exman members try to do. I think what applies to my firm also applies to all organizations. When the pandemic hit and the shutdown was imposed in March, my firm came out with 3 pillars. The first one is to respond. So the question is, what is our response? And in responding, that cuts across a lot of things. People began to talk about the future of work. How do you work from home and still deliver your budget expectations and all of those things? How do you still serve your clients? How do you still maintain cordial relationship, interaction with your clients and all of those things? The second pillar is recover. So how do you recover? What measures do you need to put in place to recover? If you succeed in exiting the recovery phase, how do you thrive post-pandemic? So those are the 3 questions that we subjected our strategic priorities of growth, transformation, and brand to. So under each of those respond, recover, and thrive, we relooked, we reimagined our growth priority. We reimagined our transformation priority. We reimagined our brand footprints in the market. And we also came to the recover phase and did the same thing, and also to see what post the pandemic environment is going to look at for those, we call it GTB, growth, transformation, brand. So it is something that I feel that Exman members also probably need to do. So from a tax point of view, I'm saying that there is need for impact assessment, and you can't do it by yourself. You actually need professionals to deep dive into all the highlights of the Finance Act of 2020 coming from 2019. What do this mean for your business? We are not saying that the ultimate success of the business is going to be tax driven. But let me tell you, sir, nobody, no entrepreneur, no organization, no businessman sets up a business with the ultimate purpose of paying taxes. Tax is a natural incident or ancillary to doing well in business or a particular transaction you are doing. Your driver, when you set up a business, is to add value, meet a particular need, and get paid. Because till you die, you'll be responsible to paying bills, and the money to pay those bills must come from somewhere. So if nobody sits down and say, I'm setting up this business because I want to pay tax. But we know at some point, in fact, there was a particular meeting, sir, that I was involved in. And the gentleman was telling me, he said, look, guy, I know we will pay tax, so I'm not interested in tax planning. Do you know what this project gives to me on a monthly basis? Just help me do my compliance properly. The guy, as far as he's concerned, sir, is not interested in any tax planning opportunity within the structure of the business. He said, no, look at how much it gives me daily and how much it gives me on a monthly basis. I can just do that and give the government. So taxpayers must carry out impact assessment to determine how the act will impact their business. And do you know the funny thing, sir? When you talk of recovery, when you talk of resilience, it is about the capacity, at what level the shocks meet your business. Just like you say that fingers are not equal, we are not always on the same point in the spectrum. Even if we start our businesses together today, in the next 3-4 years, we will not be on the same spectrum. And our capacity to respond to shocks will be different. So you can imagine somebody who spends all his salary. I'm just an individual now. If he spends all his salary and there are shocks, there will be problem. And compare it to somebody who spends only 40% of his salary and keeps 60% or invests 60% of his salary in something that he can turn to cash quickly. The capacity of those two people to respond to shocks will be different. And that was what happened in the case of many companies when the pandemic hit and their people need to work from home. So if you don't have robust infrastructure that allows somebody to work remotely, you are already limited in the capacity to either to serve further your clients or to be able to even get your people engaged. You are waiting for when they will remove the lockdown so that they can come back to the office. So many businesses suffered from that problem. Now, the other thing is that there is a need to train staff on new tax compliance requirements. You know, because of the pandemic, even the government accelerated on their technology transformation. A lot of the payment platforms, filing platforms were activated so that they will not lose revenues, as you are saying that, okay, they are still coming after you in the course of that period. Then tax strategies. Engage tax consultants to re-strategize for effective tax planning in the current regime. It is always, see, tax liability, when it is avoidable, sir, is a leakage to the bottom line. It pains me when people need to pay taxes that they should not pay or should not have paid if they are planned properly their fiscal strategy. So this is what we are saying here. And some of them can be triggered by your processes. Some of them can be triggered by the fact that you are not taking advantages of some assets that are in your business. Then in terms of clarification too, of course, there are some transitional guidelines that are expected as a result of the Finance Act 2020, which the FRS and so many other authorities that are impacted by that law should produce. Now, because you are also professionals, and I'm a professional like you, and you have said that this is a tax training, let me tell you and leave you with the golden rule of tax practice. Maybe it can be applicable in your field. The golden rule of tax practice is this: if anybody is going to go to jail, make sure it's the client. Thank you.
Thank you very much for that, Mr. Sheye Arolo. We spent just almost the 1 hour we planned for that, and I'm very sure we all are excited by your presentation. I can tell that some people are already giving you warm round of applause. And for those of us that are in-house, can we please give him a big round of applause? And let me ask people that are online also to please give him a very large round of applause. Once again, I thank you for that. It's now time for us to quickly field questions. Questions. We have questions that are coming in already online. I have one here, and I will expect other questions to please come in. But for the purpose of time, we'll just restrict our questions to only 5. We'll restrict our questions to only 5. I have a first question here. The first question I will read it. It's coming online. And it's from Mr. Piles Agadagba. And he has written, the Finance Act of year 2020 said there will be no penalties for non or late filing of educational tax. So I'm asking, are companies still paying educational tax? That's his question. It's a direct one. Are companies still paying educational tax? Okay, if we have other questions, I'm still waiting. If we have other questions, can we have them? In-house also, if you have questions, you are not exempted. I should recognize one of our past presidents. Past President Adegashin is in here, and thank you very much, sir, for gracing this occasion. Further questions, please? Somebody online. Okay, can you spotlight him, please? All right, please, can you give us your name? If you're a member of Exman, tell us your company's name, and we'll have your question. All right, sir. Go on. You have the floor, sir. Can you go on? We are waiting for you. Okay, let's go ahead. If we have other questions, other people online, can we please have you? Okay, somebody is there again. I can't read that here. Can somebody send it to me? Have you sent it? Send it to me. Can that be sent to me, please? Yeah, question. Okay, yes. Yes, please.
Thank you very much. My question regarding what the speaker said to us concerning withholding tax receipts and what the construction industry were able to do with their own reduction for 2.5%. One of the challenges that we face is that you find situations where you have a lot of withholding tax receipts, and then there is a limit to which aspect of taxes that you can use it to defray. So are there any suggestions you can give us, in which case we don't have to use scarce liquidity to have to pay for tax liabilities when we have so much already with the government
in terms of withholding tax receipts. If there's any practical suggestion that you can give us, that would be most appreciated. Thank you.
Thank you very much for that, Mr. Past President. Mr. President, you have a question also. There's a burning issue. We all are faced with the challenges of taxation, Mr. Guest Speaker.
Thank you. I just want to add to what Kaudola Geshin said. Also, I think in the past, when we don't exhaust our withholding tax liabilities, then we are then told we cannot transfer it to the following year. Is it not transferable? Because sometimes our tax people can be rigid and said, no, 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 that was for last year. You can't use it for this year.
Thank you very much for that, Mr. President. Tax credit transfer. Mr. Guest Speaker, tax credit transfer, is it transferable? For how many years can we transfer? To what extent can we transfer? That's very important. I think I have another question here. Can you just permit me to quickly check, Mr. Guest Speaker? This question is from Bonike to me, and it reads, can the speaker give examples of fiscal strategies business can take? Can the guest speaker give examples of fiscal strategies businesses can take? Is that understood? Thank you very much.
Thank you, Mr. Oyebade. Let me start from the question from the president about carrying forward your withholding tax credit. I think what happened is that desperate times require desperate measures. The first time I will hear, not by a circular, not by a regulation, that the FRS will say they want to restrict the application of particular years of or age of two basic examples or three basic examples. Taxpayers or businesses find themselves in, depending on the year of commencement of business or incorporation, they find themselves in different kinds of scenarios. Some particular companies, don't forget that even the issue of withholding tax and as a credit ventured into Nigerian tax ordinance more than 50 years ago. In fact, it was an ordinance in 1939 that introduced withholding tax into the Nigerian tax balance. So you can imagine a company that had been in operation since 1970 and has been profitable and has not been able to relieve all its withholding tax credits. It might even be having withholding tax credit notes issued in 1980. And a number of relocations, transformation, changes without appropriate tracking had happened in the tax office. So you brought a withholding tax credit note of 1970 or 1980 or 1990, and they are unable to trace. They are not saying it's not our credit note, but they are unable to even trace it, because you know in accounting, the most important principle is double entry. So once you see one leg, you are looking for the other leg. And unfortunately, the taxman is unable to see this your leg in his own records. So they came up in 2014 because they were already cash strapped. The oil sector is not performing, no more money from anywhere. And so if you are asking for a refund on a predominant, which we are
the application is predominantly based on some credit notes that they think you should have be able to come into a meeting point with you. So they just decide arbitrarily, not like I said, not by force of circular or regulation that look, if they look at your withholding tax credit application and they for refund, and they see that, look, you should have enjoyed this particular thing, they are going to make a cutoff. In fact, some of their road shows, stakeholders engagement, they alluded to something like that. But the reality was that by law, withholding tax credits can be carried forward indefinitely. And that has not been circumscribed by either the Finance Act 2019 or the Finance Act 2020. And I don't think it will ever be, because it is robbery. It is outright robbery to deny somebody. And that's why clients, they are very funny. I must confess to you, I have 3 clients I will give example of. We have been in conversation with them before the collapse in 2014, more than 6 occasions to say, guys, let's put in an application. Let's adopt a strategy of periodic application for refund. Because you are just building up excess withholding tax for yourself. There's no need. But because of the fear that once you submit a withholding tax application for refund or an application for tax refund, it triggers an audit. What do you need to fear? Let's even look at what you have. Let's even do a ballpark erosion in terms of, okay, FRS will not want to pay this much. They will come up with some additional tax liability here and there. It might not be more than 2.5% of what you are claiming. You still have a significant amount that you can collect. So let's go. They did not do anything. 3 companies. They now called me in 2020 when the shutdown or lockdown was lifted to say we should come and revisit that conversation. In fact, I told them, I said, why now? Because when the government had greater fiscal headroom to give you money, you refused to follow up. It wasn't your front burner item. So when the government is struggling, in fact, let me tell you this, sir. It's a secret, but it's open now, which is that even the FRS chairman is running away from discussions on tax refund. Once he realizes the reason why you want to talk to him is about your application that the FRS has not responded to, no appointment. Because he is yet to even deliver on the target collection for the year. And it is from that he's going to pay. Yes, sir. So I'm saying to you, sir, that no circular, no regulation has said that withholding tax credits cannot be carried forward. In fact, the beauty of the one you realized last year is for you to use it this year. So if anybody tells you, and that's why certain things that they say in the course of an audit or investigation should be tested with professionals. Just test it with those who are competent in that field. Sir, if you ask me, I came to you and said, sir, what does experiential marketing profession, what do they do? I don't know so much about it, but just the same way that you can also not speak so much about taxation, which is my own bread and butter, I will not also pretend to know so much about experiential marketing professionals' methodology, approach, and I can't, because it's not my field. So test whatever you hear with professionals who can direct you to that place in the law to say, look, this is what the law says. And if you have the audacity, you can challenge the FRS. Sir, you also said something about people trying to limit how much of withholding tax you can utilize. Is that the question? Yes. So, and that's why, my comment about desperate times calls for desperate measures. It is cheating. When we were growing up in this tax practice, one thing that we realized is that tax is fungible. Cash is fungible. It loses the shape by which it came into your books. So the same taxpayer that has been exposed to you on a particular, in fact, do you know that there are some people that the reason for their excess cash with the FRS is VAT? You understand? And they have based their tax refund application on that excess. Now, you now come to, you finish the audit, you determine a liability, and the significant portion of the liability is coming from company income tax. And you are saying that you should come and settle that before he will get his tax refund because it's related to VAT. I think it's outright cheating. They try to impose it. I had a particular client that the excess refund they have in VAT is over 2 billion. When the FRS did their CIT liability for those years in review, I think it came to about 600 million. FRS is insisted at the top and paid 600 million. They said to FRS, net off and pay us the rest. So there's no story. Because we needed cash that we are even applying for. Look, you cannot be having a spade and be using your hand to dig. Yes, sir. So I think it's a way by which the tax authorities are either delaying settling the tax liability, the refund application, or to just cheat you outrightly. That when they erect sufficient barriers on your plan to recover that money, you might either give up or remain persistent. So it's to demotivate the taxpayer, and it's something that is not good enough. Let me skip the issue of fiscal strategy to go to education tax. Look, we still pay education tax. It's still 2% of accessible profit. So for Nigerian companies, so that's the simple answer. Now, when he said about waivers of penalties, late filing, and all, I said it that by the time we passed the Finance Act 2019 at the beginning of 2020, the government came up with some kinds of economic stimulus bill, which even the coronavirus did not allow the National Assembly to pass. So they devolved the initiatives to the various government agencies that came up with all kinds of very detailed succor or support for taxpayers. So you see the State Internal Revenue Service saying they are extending deadlines for submission of this or submission of that, or penalties and all of those. So if you've taken advantage of those filing deadlines, there should be no problem. There should be no penalties for late filing and all of those. Now, on the issue of fiscal strategy and example, no, there is no one cap fits all. No one cap fits all. We need to look into your business. It's just like saying, sir, you are a doctor. People can come to present to you malaria. Whilst you are giving somebody Lonat, you are saying somebody should go and use Aquatem. You are saying somebody else should go and use Pansida and so many other things. So and it's the same malaria. We are talking malaria. That's the general class of the problem that those people have presented. But you are giving them different prescriptions. There must be a reason. So the best thing to do really is not to think there is a one cap fit all strategy. It has to be a solution that is prescribed based on your presentation. I won't want to say something that you will say that you tried it did not work, when I do not know the condition of your business. When it comes to mapping strategies, when it comes to recommending strategies, it has to be fact-based. Where is your business? Is it at a response stage, or at a recovery stage, or at a thriving stage? The solutions and prescriptions are going to be different depending on where you are when the shocks hit you. So that's what I would say in relation to those questions, that we may need a closer interaction with the professional in this area to help. And again, it might only not be tax strategy that you need. It might be an enterprise-wide strategy of which tax will be just one element in the matter. So even if you fix the tax, some other things that are bedeviling that business will not make the tax strategy to even work. So those are the reasons why I don't do general, not that I can't give examples, but I like to say, look, let us match the prescription to your situation. So thank you so much, sirs.
Thank you very much for those explanations and answers you were able to fill, Mr. Guest Speaker. Here at Exman, we do not have consultancy fee to give you, but one thing we are very happy to give you is a very nice gift that we are very sure by the time you take it to your office, decide to put it in your house, definitely the value will far outweigh the consultancy we will have paid. Again, I thank you, but to thank you better is Mr. President. Mr. President, you want to step up, please, and do your role. Thank you.
You have done the thanking. Thank you very much, my able governor. I always refer to him as governor first before Exman, because that's a bigger cap. Yeah. So, Mr. Rolo, we are really very grateful. I don't want to take too much of the time of the people using their data, and very grateful. So we have this token of plaque, please. Thank you very much. We appreciate it. Thank you.
To thank the executive of Exman for this wonderful presentation. I will cherish this because the quality reminds me of the one that was presented to me in the UK in 2017. It was a crystal plaque like this, very, very solid. I appreciate you, sir. Thank you so much.
Many people choose to reduce their working hours gradually, topping up their income from their pension and later on increasing the amount they take when they stop work completely.
Thank you for that. Next, we'll be having trivial questions. And the winners will have some gifts. So please be attentive as we go through these questions. Question 1 of 5. Question 1 of 5. Please go online and answer the questions. Go online and answer the questions. Winners are going to be given some gifts. So please go online and answer the questions.
Good day, ladies and gentlemen. So to play this trivia, all you simply need to do is go to www.menti.com, and then you'll ask you to enter the code you'd see on your screen. www.menti.com. So once we start, you won't be able to join. So you need to join in. So we'll just wait for a number of us to join before we kickstart the trivia. It promises to be a fun and engaging one. Winners will be chosen. It's going to be fastest fingers and things like that. So far, we have only about 8 people. I believe we could do better than that. It promises to be interesting. www.menti.com. That's MENTI.com. So we'll just wait 1 more minute to get more people to come in, and then we could start. Okay, now we have about 16. I believe once we hit 20, we could start. Okay, 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 okay. Okay, so I think we could start right about now. Are you ready? So you need to watch the questions on your screen. You have about 20 seconds to answer each question, and we'll start right now. Okay, so this is interesting. So this is the performance of this last question. As you could see, so go to the next one. So here's the leaderboard of a performance so far. On here, we see that Oneza is leading and with the fastest finger. So we go on to the next one again. So this was the performance of the last question. And then overall, we'll have a winner when we answer the last question. So we're going into the next question now. So this is the final question. Fastest fingers first. Go. And our overall winner is Femi with 3,817 points. Thank you. Hope to join you again on the next one.
Retirement is no longer the cliff edge it once was. Many people choose to reduce their working hours gradually, topping up their income from their pension and later on increasing the amount they take when they stop work completely. But whether you're planning to retire fully or gradually, you have some important decisions to make about how you're going to provide yourself with an income. On average, people live a lot longer than they used to, so the chances are you'll be retired for many years. It's important, therefore, to make sure you have enough secure income so you're not worrying about how to pay the bills, no matter how long you're retired. Take your time, get all the facts, understand your options, so you can make sure your money lasts as long as you do. There's now more choice about how and when you can start to draw your retirement income, but with more choice comes complexity. Things to think about are the level of income you'll need, how this matches up to the income you're expecting to get from the state and your pensions, how much tax will you pay, are your dependents covered. With careful planning and a bit of help, you can make good, informed decisions for your retirement.
Thank you for those questions. Thank you for those questions. And I want to congratulate Femi for winning with a total point of 3,817. I'm sure we all are. Let's applaud him in person and virtually. I congratulate you once more, Femi, for winning. You have an option of winning a second time, or you have, for those that did not win, all of us that did not win. All of us that did not win. We have we can win the next time immediately after the next presentation, which is going to be on pension, the relevance of pension in our changing world, the relevance of pension in our changing world. The Nigerian scenario is going to be looked at, and the person to do that is none other than the one that's been here for over an hour. He was here seated, listening also to the taxation presentation by Mr. Arolo Olushe. His own name is, I would like him to please step forward as I do a little introduction of Mr. Lanre Oyekon. Can we please give him a big round of applause? Mr. Lanre will be speaking to us on pension, the relevance of pension in our changing world. And that's a presentation he has so prepared for. By qualification, he holds a BA in philosophy. He also holds a master's in industrial relations. He has over 14 years work experience in the financial sector, but not in banking. And he has been working in that industry for as long as he has been around. I said earlier, he will give us a very smart talk on the relevance of pension in our changing world, using the Nigerian case as a good study. Please make welcome in-house and virtually, Mr. Lanre.
Thank you very much, sir. Good afternoon, Mr. President, the past president, executive members of Exman. It's a pleasure to be with us here today. When I first got the information to present, when I was first contacted to take this topic, I said to myself, what an interesting topic in an interesting time of ours. I looked at the topic, relevance of pension in the changing world. Our world, you agree with me, it's fast changing. Things are not what they used to be 5 years ago, 10 years ago, 3 years ago. A lot of things has changed. The way we engage each other has changed. The way we do our business has changed. The way we even relate with our immediate environment has also changed. So why won't we, a product of the world, also change with it? If you fail to change, it is said that the only permanent thing in life is what? Is change. If you don't change with change, you will remain redundant and the world will move on without you. So it is important that we also change with change and also change while anticipating change, you know, so that you're prepared for when the change eventually occurs. So the topic is relevance of pension in the changing world. Now, I'll be talking to us under the following outline. The world has changed. Why pension? It will be a great disservice to you and to all your beneficiaries if after working for a very long time and you retire into nothing. You know, so it will be a very big disservice to yourself. And that is why we'll take this outline, why pension. We will talk about, we'll look at the Nigerian pension industry. We'll look at where we started from and where we are now. And we'll also look at the features of, we'll look at the contributory pension scheme, which is the current, which is on the front burner as we speak. We'll look at the features of the contributory pension scheme. We'll look at the objectives of the contributory pension scheme. We'll look at the withdrawal process under the contributory presentation, but I will expect loads of questions after my presentation because I know that a lot of us are active contributors under this contributory pension scheme. And if you're an employer and you don't have a pension plan in place for your staff, I don't think that is good enough. So I want to charge us that immediately after this presentation, if you don't have a pension plan in place in your organization, no matter how small, if you have one plan for them, our world is fast changing, from what we used to know of it. "10 years before now, a time will come where we'll have a sitting arrangement such as this. If you have a sitting arrangement like this one, people will come and tell you, are you okay? Now you hear words such as social distancing, where is your nose mask, where is your whatever, sanitize and sanitizing and all that. So that is the language you hear frequently on the streets and everywhere. So our world is fast changing. Even as a business owner, who would have thought that some businesses will be online today? So the world is fast changing. The world as we know of it has changed. And like I said earlier, you need to change with it, or you anticipate the change and change before it, so that when it comes, you are already at home and you can easily adjust. Before, all this is no thanks to COVID-19 that struck our world in early 2020, and we went on total lockdown in Nigeria for almost about 6 months, I don't know how many of us survived that period. Some of us have been working for money, and our money has not been working for us. According to experts, it is said that if business will go bad today, or your employer says to you, your service is no longer required, can you still maintain the same lifestyle or standard of living for another 6 months? It is said that if you cannot maintain the standard of living for another 6 months, all your life, you have only been working for money, and your money has not been working for you. So that's why I said that this topic is coming at an interesting time of our lives. We were just coming out of recession when COVID-19 struck. So that is another life-changing event, especially for us in Nigeria. We've had 2 recessions, maybe in the last 5 years, so we're just trying to get out of one when COVID-19 struck our world, and we're still battling with it. Even till now, the economy is still trying to get back to its feet and get itself working again. High pensions. 1, people can't work forever. A time will come where you will not be able to run from the north to the south like you used to do now. A time will come where regular income will no longer be the case for you. A time will come where you no longer have the strength to do the things that you do now that is helping you to generate income for yourself and helping you, the income is helping you to take care of members of your family. A time will come where you will not be able to do all these things again. Don't forget, people can't work forever. So you need to prepare and be prepared for the rainy day. 2, worsening life expectancy in Nigeria. Our life expectancy is fast dropping in Nigeria. So it is important that you start to plan for your tomorrow today. No time. It is said that the best time to plan was 200 years ago. The next best time to plan is now. So it is never too late. So our life expectancy is dropping in Nigeria as we speak, and we need to be prepared. Thirdly, mitigate against future financial hardship. You can't put in 30 years of hard work of your life, into you can't work actively like you're doing now for 30 years, and when you retire into nothing. What that means is that you have only been working for money, and your money has not been working for you. That is why pension is very important as we speak. Achieve financial freedom and independence. Trust me, you don't want to retire, or you don't want to be tired at 50 and you're still looking up to your children to feed you. You first and foremost must have taken care of your future, so that whatever anybody brings when that time comes, even if they can afford to bring, you are home and dry, you are home and good. So you don't want to wait on anybody to be able to feed yourself or do the things that you ordinarily do today. And lastly, self-fulfillment and actualization. When you retire, how do you want to live your retirement life? Some people will say, like a friend said, when I retire, I want to live like a king. A friend said, when I retire, I don't want to do anything again. I just want to sit back and enjoy the fruit of my labor. A friend said, when I retire, I want to become a globetrotter. I want to travel all over the world. A friend said, when I retire, currently I change my car every 3 years. A friend said, when I retire, I want to change my car every year. And I said, it is not impossible, but you must be what? Be prepared and be ready to put in the work and sacrifice to live that lifestyle, that dream lifestyle of yours. So lastly, it is to achieve self-fulfillment and actualization. When you set out to achieve something and you retire and you're seeing those things that you have dreamt of, that when I retire, these are the things I want to be doing. I want to have that financial freedom, and you're able to achieve that. That's inner joy. It comes with, it brings about an inner joy for you. If you're able to, you set out to achieve something and you're able to achieve it, you derive this inner joy by achieving those things that you set out to achieve. Now, let's look at the Nigerian pension industry. The Nigerian pension industry in Nigeria. The first legislative pension in Nigeria was in 1951, and it has a retroactive effect back to 1946. That's the first legislative pension in Nigeria, and it is called Pension Ordinance. The second legislative pension in Nigeria was the National Provident Fund of 1961. Then we had National Social Insurance Trust Fund in the year 1993. And then currently we have the Contributory Pension Scheme, and that is what we currently work with in Nigeria. So even pension in Nigeria has not been static. It has undergone different restructuring, different reforms from time to time. So if you look at the first three legislative pension that we've had in Nigeria before 2004, before the advent of the Contributory Pension Scheme, you see that it only takes care of employees of the government. It doesn't speak to employees in the private sector. So, and that is what gave birth to the Contributory Pension Scheme that came and spoke to both employees of the public sector and employees of the private sector. Public sector employees of the federal government, public sector employees of the state government, and employees in the private sector. So it is the failure of past legislative pension scheme that gave birth to what we have today, the Contributory Pension Scheme. Now, if you look at past schemes, you have one body as regulating itself. You have the same body in charge of investing and managing the fund. You have the same body as the one in charge of calling the shots. So there was no proper guidance. There was no rules and regulation. So there was nobody monitoring who, nothing like that. But under the Contributory Pension Scheme, it gave back to different institutions managing pension for Nigerian employees of both the public sector and the private sector. Now, it gave back to the pension fund administrator. The job of the pension fund administrator is to take investment decisions according to the Pension Reform Act of 2004 and of 2014. It gave back to the pension fund custodians who takes first custody of the fund, before it is being invested by the pension fund administrator. In Nigeria today, we have about 21 pension fund administrators. But for the pension fund custodian, we have just 4. And they are UBA custodian, Diamond custodian, Zenith custodian, and First Bank custodian. So you as an employer, at the end of the month, you want to make a remittance on behalf of your employees. You just look out for the pension fund custodian that your pension fund administrator is using. And it has to be one among these 4 custodians that I just mentioned. So what are the main features of this contributory pension scheme? And I've mentioned some of them earlier. Now, it gave birth to a uniform contributory pension scheme for the public and provide private sector in Nigeria. Like I said, past schemes only takes care of employees of the public sector. It doesn't speak to employees of the private sector. Secondly, it brought about joint contribution of the employee and the employer. The employer contributes its own part. The employee also contributes its own portion. The contribution is employee 8%, employer 10%, making 18% that will go into the individual employee's pension account at the end of each month. And it has to be deducted before tax. So every fund going into your pension account is tax exempt. So this has to be deducted before that is done. Now, it privatizes the management for all pensions in the country. It is no longer government managed. That is one of the beauty of this contributory pension scheme. You have the regulatory body, the National Pension Commission, who operate as a professional body on its own, though it's an arm of the government. Then you have the pension fund managers, who are also professional fund managers. Then you have you have the pension fund custodians, that is also a professional private organizations. Then you have it provides for strict regulation of the activities of pension. So the pension industry, it won't be out of place to say that it is about the best regulating sector as we speak, the current pension industry, because we don't just invest on our own idea and philosophy alone. The way and manner to invest is already contained in the Pension Reform Act of 2004 and of 2014. Okay, then it established a National Pension Commission charged with the responsibility for matters relating to the regulation. So the commission is there to ensure that there is strict adherence to the rules guiding the pension scheme in Nigeria. So today, there cannot be a payout of anybody's account from anybody's account without the approval of the commission. There are certain information that you cannot update without the approval of the National Pension Commission. So that is also one of the beauty of the contributory pension scheme. Objectives of the pension reform. Objectives of the pension reform. And this speaks to the contributory pension scheme as well. It establishes sustainable pension system to empower the worker to gain control over his or her retirement savings account. Now, you don't need your employer to engage your pension fund administrator. In fact, what the law says is that you are free as an employee to determine who your administrator is. Okay, you are free to choose from any of the licensed pension fund administrator in Nigeria. It ensures transparent and efficient management of pension funds. Anytime your employer makes payment, you are expected to get a notification of that payment. The notification will tell you that your employer has made payment. It will tell you the month the employer has remitted for. It will tell you what the value remitted for you. Then it will give you your total balance in your pension account. So this gives room for transparency in the pension industry. It also promotes saving culture. Don't forget I said earlier that as an employee on a monthly basis, your own contribution is what? 8% of your basic transport and housing. Of your basic transport and housing, while your employer will contribute what? Will add 10% to that. okay, of your basic transport and housing from its own pocket, making 18% that will come into your pension account at the end of each month. Now, what are the grounds for qualification? How can I have access to my fund? People will tell you that, this Nigeria, money is easy to go in, but it is not easy to come out. You know, but so far, so good. The scheme came into Nigeria in 2004, and it came from Chile in 2004. Then we started registering Nigerian employee late 2005. We started investing a fund for Nigerian employee in July 2006. Okay, so, and we started payouts in 2010. 2010, if I'm correct, 2010 was when the first set of people we registered, we onboarded into the pension industry, started retiring, and they started accessing their pension benefits. Now, how can I have access to my fund? If you are out of work and you are less than 50 years of age, if you are out of work and you are less than 50 years of age, the law says if after 4 months, in fact, when we first started the pension industry, in the Pension Act of 2004, it says it has to be after 6 months before you can have access to your fund. But the 2014 Act says reduce it back down to 4 months. So you are less than 50 years of age, and after 4 months of no other job, the law allows you to access 25% of what you have in your pension account, unlike what is obtained in the Pension Reform Act of 2004 that says 6 months. Okay, but if you're 50 years of age and you are out of work, first and foremost, you need to understand that while you're still actively working, you can't have access to the fund. So you must be out of work before you can have access to the fund. Don't forget that the essence of pension is for what? To save for the rainy day. You know, the time where you will not have the strength to run from north to south, you know, and you don't have the strength to do the things that you currently do. Now, if you're 50 years of age and you are out of work, the law says the first thing we should look at is how much do you have in your pension account. If your fund is less than 550,000, if your fund is less than the total balance in your account, principal plus returns put together, if both are less than 550,000, the law says we should give you everything. Because if you have less than that and we want to start paying you in piecemeal, what will it amount to in our today Nigeria? So the law says we should pay you everything. In fact, sir, there is a review that is currently ongoing. They are looking at reviewing it upward. You know, that's looking at the current situation of things in the country, that 550,000 may even be too small, you know, to do anything with. So they are looking at an upward review. The commission is looking at that as we speak. Now, but if you have more than that, 550 and above, the law says you stand to first of all get a lump sum of between 25 and 50%. Why the remainder, you can now choose to either go for a program withdrawal, which is a product of offered by your pension fund administrator, and or annuity offered by a licensed insurance company, licensed to operate a life insurance policy. So what I'm saying in essence is that if you retire today and you're 50 years and above and you have 5 billion in your account, okay, if you approach me that you want to access your fund, you stand to get between 25 and 50% of that money. While the remainder, you can now choose to either go for program withdrawal offered by your pension fund administrator, or you go for what? In annuity offered by an insurance company licensed to operate a life insurance policy. Okay, so now, what are the things that that is taken into consideration while calculating your initial lump sum? Okay, Now, if you look at the pension calculator, it will take consideration of your current pension balance. It will take consideration of your age. It will take consideration of your sex. Then your last monthly basic transport and housing. These are the informations that will key into the pension calculator. And at the end of the day, to now give us what your initial lump sum will be. But what the law wants to achieve is that you don't earn on a monthly basis. If you go for program withdrawal, you don't earn less than 50% of your last basic transport and housing on a monthly basis. So if your last monthly basic transport and housing is say 100,000, if you retire today, your monthly pension should not be less than 50,000 naira. So that is the first thing that your pension manager will first of all look at. They will take that one out first. So whatever is left will be between the range of 25 and 50%. That is how the pension calculator has been designed. And that is what we've been paying retired Nigerian employees with. Now, but if after paying you your initial lump sum, you choose program withdrawal, what that means is that you have said to your pension manager that continue to pay me monthly salary for as long as possible. But should you choose annuity, after your pension manager has paid you your initial lump sum of between 25% and 50%, the remainder of your fund will now be moved to insurance company of your choice. So what insurance company is offering you is a lifetime salary. But your pension manager in the form, the withdrawal form that you'll be given, should you choose program withdrawal, they will first of all place you on a monthly salary. If you are a male, according to that template, 18 years. If you are a female, 21 years. Now, so the template the form is not saying that after the expiration of 18 or 21 years, your fund is finished. This is what we had before now at the initial stage. But all that has since changed. So after the expiration of 18 and 21 years, they will now call you again based on returns that have been added to your principal. They will now do another program. They will now program you on another monthly salary. That is how program withdrawal works. But in 2007, the National Pension Commission called for pension enhancement. Pension enhancement is saying that, okay, so based on the returns on investment that have accrued over the years, it is high time to up the monthly salary of every Nigerian retiree that opted for programmed withdrawal. Because if you choose program withdrawal, you are still under the regulation of the National Pension Commission. Because the pension calculator is predicated on 8% annual return. But pension managers have been doing more than 8% on an annual basis. So that was what called for the pension enhancement the pension industry witnessed in 2007. In 2017. And we had another one in 2020 before COVID-19 struck. So 3 years afterwards, we got another pension enhancement. So that is how pension payment is being done. Okay, so if you retire today, you have less than 550,000 in your pension account, we'll pay you everything. But if you have more than that, you first of all get a lump sum. It is called initial lump sum of between 25 and 50%. While the remainder, you can now choose to either go for program withdrawal or annuity. Program withdrawal is a product offered by your current pension fund administrator, while annuity is a product of what? A licensed insurance company, licensed to operate a life insurance policy. Now, experts came together and said, based on experience of developed countries that has operated the type of pension scheme in Nigeria, these are events that may still happen in the pension industry. Now, when we first started, there was nothing like multi-fund structure. there was nothing like even the pension enhancement. The industry never even thought of it, before the first enhancement was done in 2017. But today, a lot of reforms, a lot of changes had happened to the pension industry. We now have the multi-fund structure that invests and manage your fund according to your risk appetite and age. Before now, when we are investing your fund, we don't take cognizance of these two, of your age and risk appetite. Imagine somebody who is already 60 and you are investing the person's money the same way you invest for a 20-year-old boy. So the guy who is 60 is nearing his retirement. So what that means is that you need to be what? Conservative while investing his fund. If you cannot grow his money, ensure that his principal or our principal is not what? Eroded. So that is what we currently have now. The commissioner have multi-fund structure. We now have Fund 1, Fund 2, Fund 3, Fund 4, Fund 5, Fund 6. Fund 1 is for employees between the age of 18 and 49. Fund 2 is also for employees between the same age, 18 and 49. Fund 3 is for people who are 49 years old, who are 50 and above. While Fund 4 is for what? Retirees, people who are retired and they are on monthly pension. Now, you will see that Fund 1 and Fund 2 covers employees of the same age. For Fund 1, when we first started, nobody was placed in the bucket of Fund 1. Nobody. But age 18 and 49, we put them in Fund 2. Reason being that Fund 1 is an aggressive fund. So you have to apply to come to Fund 1. But you have to be in Fund 2 to come to Fund 1. You can also be in Fund 3 and apply to come to Fund 2. You can apply to come a step downward, but you cannot go upward. Or go back to your normal fund. You cannot say I'm in Fund 3, move me to Fund 4. You cannot say I'm in Fund 2, move me to Fund 3. But you can say I'm in Fund 3, move me to Fund 2. Or go take me back to my Fund 3. So Fund 1 is an aggressive fund because the difference between all these funds is the amount of exposure to equity, to variable income instruments. But can we really shy away from variable income instruments? Experts have said that the only way to fight inflation is through investing in a variable income space. So no matter how small, you still have to do variable income. But the amount you're not exposed to it is what differentiates these funds from one another. Okay, so let's look at what the future holds for the contributory pension scheme that is currently obtainable in Nigeria. The advent of personalized pension advisory service. So gone are the days where you say, I will only provide the regular pension service to my clients. Pension managers have now started performing and delivering service that are outside the ordinary pension service to their clients. You know why? They have to do this because there is what we call the transfer window that is currently out there now. So you now have the option to either continue to stay with your pension manager or you move to another pension fund administrator. But if I have a pension manager that is currently not only giving me the regular pension service, but is also taking care of my other needs, where will I want to move? So we are beginning to see that. People are now beginning to offer their clients and clients of other pension managers financial advisory. They are beginning to provide them financial advice and retirement advice to their existing clients and non-clients, just to continue to hold the loyalty of their existing clients. Experts have also said that we may likely see the creation of shared service centers to handle back office operations, because what is required of you to be at the top of your game in the pension industry, it's a whole lot. Imagine a database of over 1 million people. So you may want to say, you know what, I want to contract this particular department out, just the same way we have seen in the telecom space. So experts have said that as time goes on, we would also be experiencing that in the pension industry. Retirement savings used as equity for mortgages. That talk is also ongoing. A situation whereby you can use part of your fund to access mortgage. So if I have interest in acquiring a mortgage and I have money in my pension account, why can't I take part of it to access this mortgage? So the commission is currently looking at that as we speak. So as time goes on, we may begin to see that too, where contributors can use part of their money to access mortgage. Experts have also said that we may begin to see, as time goes on, we'll begin to see fierce competition with brand quality, innovation, and quality service delivery, being critical for the survival of most PFAs. This we are already seeing in the pension industry. Because when we first started the industry, there was nothing like download my app, but now almost all the administrators have app. So you don't need to, what this does for you is that it gives you access to your information as contained on the database of your pension provider. So if you want to continue to keep your clients now, you must have this mobile app where they can easily get information, first-hand information, without having to come to the organization or call on their account officer. We're also going to start seeing mergers and acquisition in the pension industry. The first one happened in 2010. Yes, we've started seeing that. And last year, we had a group of pension managers coming together, because for you to survive in this pension industry, you will need a whole lot of expertise and finance. So currently, some pension managers will still have to merge or be consumed by the bigger pension administrators. We also expect to see trade unions clamoring for pension contributor protection laws. And that is not currently on ground as we speak. But the National Pension Commission, if you go through the Pension Reform Act of 2004 and 2014, you will see that there is a whole lot there to protect the contributors and their funds. Okay, so that pension managers does not do with it the way it likes, So we're already seeing some of these things play out in the pension industry, and we may likely see more as time goes on. Don't forget, our world is changing, and everything around us is also changing. So there is a need for us to also change with time. If not, you will become redundant, and the world will just leave you by. And before you know it, it will become too late. The best time to plan was 200 years ago, and the next best time to plan is now. So it is not too late. So if you are a business owner and you don't have a pension account for your people, please try as much as possible to have a pension plan for them. It will increase their loyalty towards your organization, and they also know there is this what's it called? There is this rest of mind that come with when your employer makes payment and you get SMS notification. That's joy. That, oh, even if I leave today, I think I am okay. I don't need to be at the mercy of my employer. I don't need to come and meet my employer and say, oh, Mr. James, I've been with you for 10 years. I'm leaving. What's my gain? No, you're already seeing your gain on a monthly basis. So anytime your employer makes that 10% payment, your employer is already paying you off. So you don't need to come back to your employer after active service years of about 10, 20, 30 years and say, and you are the mercy. Even if your employer asks you to go today, you're fine, because it has on a monthly basis been paying you off on given to the 10% contribution. The employer also is regulated to add to the 8% that has been deducted from your pension account. In conclusion, The Contributory Pension Scheme and the Pension Reform Act 2004 and 2014 is a welcome idea aimed at addressing the associated problems of the old pension system, thereby making the dreams of pensioners a reality by guaranteed payment of their benefits as and when due. The scheme will continue to undergo reforms from time to time, so long as our world continues to evolve. Thank you for having me.
If there are applause, if that applause was for me to remount the stage, I want to thank you for it. But I must say that Mr. Lanre deserves a big round of applause, a resounding one. Thank you. Right now, he's blushing and he's definitely taking a big bow for that. That was a lot of exposure he has given us. A few things I do not even know are suddenly coming up. But right now, I think it's time for us to have questions. Your questions are coming in, and I'm going to start reading them. We do not have so much time yet. We need to check out the questions which you all have. Pension is very important to all of us because it's as good as the insurance for our entire period that we have worked. And that's the more reason why we should ask the questions now. I have a few of them here, and I'm very sure Mr. Lanre is up to the task. Now, to start with, I have a question from Mr. Henry Edogame. Question for the speaker. There are changes in the rates of contribution to be made to the scheme. Under the Act, both employer and employee are required to make a minimum of 10% and 8% respectively unfortunately, that question is not concluded here with me. While we're still trying to get around that, if you have questions, please do indicate. Please do indicate, and gentlemen at the back end will please spotlight the one. Please indicate quickly. Indicate quickly, please. You also may send through online, which is going to be appreciated. If it's possible for me to read on the screen, is that possible? Okay, I'd like to take Mr. Henry's on first. Again, Mr. Henry, there are changes in the rates of contribution to be made to the scheme. Under the Act, both employer and employee are required to make a minimum of 10% and 8% respectively of the employee's monthly emolument. 7.5% of the employee's monthly basic, housing, and transport allowances by both parties. Under the repealed Act, is employees' monthly emolument the same as total of basic, housing, and transport allowances? The current Act says total emolument. unlike the repealed act. Mr. Larry, is that understood? The question, under the repealed act, is employees' monthly emolument the same as total of basic, housing, and transport allowances? The current act says total emolument, unlike the repealed act. As a matter of fact, most of us employers are very, very concerned about this. Because on the one part, it favors the employer. On the other part, it favors the employee. Are we looking at the total emolument as in your total gross? Or we are looking at part of the gross, which can be said to be basic, where basic is determined by the employer, transport allowance and housing allowance, and leaving the rest of the allowances. Now, are we looking at only these three components, or we are looking at the total emolument? I'll take the second question. Can we scroll up, please? Can we scroll up, please? Second question. I saw a question from Rosemary. Second question, can we scroll up, please? All right. Question for the speaker. There are changes in the rates of contribution to be made to the scheme. Under the act, that's still the same question. It's still the same question. It's still the same question. Okay, what happens to the balance of people's pension if they die before fully taking the contributed fund? In the case of death, what happens? We want you to please throw a little more light on that. In the case of death, where a contributor dies, whether testate or intestate, what happens, please? Do you have other questions? There have been instances of pension mismanagement. This is very, very important. There have been instances of pension mismanagement. How is this being mitigated by the Act? And what are the contributors' recourse or recourses in such a case? Okay? Do we get that? I take it again. There have been instances of pension mismanagement. Well, I like people quoting specific instances, so we don't go, we are professionals. Don't let us speculate. If there are such cases, if it's been adjudged by a competent court of law, let's have it. But this is a question from one of our very senior members. Again, there have been instances of pension mismanagement. How is this being mitigated by the Act? And what are the contributors' recourse in such a case? We have questions in-house also. And to give the first shot is our past president, as usual, very erudite and filled with so much knowledge and capabilities of the industry. Mr. Kyle, the past president, sir.
Thank you very much. It's very good to have a COVID-19 compliance officer in-house. Thank you. The question really has to do with certain concerns of recent about the federal government, saying that they are looking at the possibility of borrowing from the pension funds. So naturally, people have some concerns about that. Does the Act provide for such, or is the government having to enact a law to be able to accommodate that? And how, well, is there anything that you can say that probably just give some measure of comfort to people who are whose pension funds might be borrowed, by the government, to assure them that there is no cause for concern? Thank you.
Mr. Lanro Ineko has been in this business for onward of about 2 decades. So I'm very sure he's quite conversant with the statements of the Act and what we say in practice. Most of us are quite concerned, and I'm very sure by the time he eventually answers our questions, we will have a comfort in our hearts to say, yes, we are doing the right thing, or this is the time for us to start doing the right thing. If there are no further questions, may I invite once again to the podium, Mr. Lanre Oyeneko.
Thank you very much for the questions. These questions only goes to show that people have been following, and that we have been able to pick a thing or two from the information that I've passed across. Thank you very much for listening in. So let me take 6 questions, 6 questions in all. The first one was by Mr. Henry, and is concerned. Okay, so he wants me to, is asking if there's a difference between total emolument and basic transport and housing, and whether your basic transport and housing makes up your total emolument, or there's a difference between both. Now, so not every employer has a breakdown of the employee's salary. Not every employer has a breakdown of the employee's salary. Now, ordinarily, you're supposed to have a breakdown of your employee's salary, okay? Where you have this breakdown, you can break it down to, say, basic, transport, housing, and other benefits. But where you have this, if your situation is you have this breakdown like that, so the law is only asking for the deduction from only the basic transport and housing, not from the gross. So other emoluments will not be touched. This is so that you can see out something to take you home. Because even the salary itself cannot take you home, but man must survive, so, but where you don't have the breakdown, we do advise our clients that don't just take from the whole. You take from the whole, whatever is left will not take the person home. Painstakingly take your time or get a professional to help you do this breakdown, so that at least at the end of the day, the employee can still have something to take home. Because the law does not say take from the gross. It says take from the basic transport and housing allowance, not from the gross. But where you don't have this breakdown, employ the service of a professional to help you break the salary down. Because what the law wants to see is this. At the end of the day, when you want to make your employee's contribution, the 8% you are contributing on behalf of that employee and the 10% of that employee must not be less than 8% of the 8% of the what's it called? The current minimum wage. The current minimum wage. So you must do it in such a way that the 8% must not be less than 8% of the current minimum wage. And the 20% that you are adding must also not be less than the current minimum wage. So whatever you can do to achieve that is fine. If you can do more than 8% of the current minimum wage is fine. If you can do more than 10, it's fine. But don't do less than it, less than that. So it must either be equal to or higher than. So that takes care of that concern. Now, secondly, in the case of sudden death of the account owner, what happens? So the first thing the law says we should look at is, does the deceased have a will? So in the absence of a will, because in your will you have said it there, who you want to inherit whatever you are leaving behind, including your money in the bank and your pension and everything, all your assets. So you'd have said it clearly in your will how you want it shared. Whether you want to give it to charity, or you want to give it to your wife and wives and children, or one of your child. Everything would have been clearly stated there. And it would have been deposited with the law. You know. So, but in the case of no will, the law says your beneficiary or beneficiaries will have to go to court and do what? Get letter of what? Administration. So it is the owner of the asset that prepares the will. The beneficiary or beneficiaries will prepare what? Will go to the law and get what? Letter of administration. So it's a will in itself. It is just that the difference is just that it is done after the demise of the owner of the asset. So the first thing you do is you approach the court. The court will give you like a blank sheet that you will take to everywhere the deceased has an asset. And the name of the asset will be quoted and the value of those assets will be put there. Then you now take it back to the court. The court will now start its own investigation and will now come out with finally with what? The letter of administration that will carry the name of the beneficiary or beneficiaries. So if you have more than one beneficiary, then both of them will have to go and open what? A joint account or an estate account where they will both be signatories to. You know, so that answers that question. So, but in this part of the world, we always see will. Anytime we hear will, we say, after all, I'm not a rich man now. What do I need a will for? But interestingly, if from where I sit and walk out from, I've seen a lot of dramas. You know, some people even say, why do I need a will? My children are very friendly with each other and, you know, they like each other so much. I don't think I need a will. They will know how to take care of themselves in case of sudden death. That is not usually the case. We've seen children of the same father, of the same mother, fight over the deceased assets. We've seen a situation whereby one, because of his level of education and exposure, he knows what to do to get the money out and has initiated the process. And he's telling the other person that started. We've seen that. So you don't have to be rich to have a will. Whatever you have that you can tag as an asset, please have a document for it. It will not cost you more than 10% of whatever you are declaring in your will as an asset. So save your beneficiary or your dependent that bad blood that usually come up at the demise of the owner of the asset. Thirdly, in case of pension mismanagement, what happens to the contributor? Okay, so the interesting thing, I said during my lecture that this industry is about the best regulated in Nigeria as we speak. I stand to be corrected. But from where I sit, I know that this industry has been so far so good. You know, we've enjoyed good regulation, you know, from the National Pension Commission. So we've not had any case of mismanagement in the pension industry under this contributory pension scheme. We've not had any case of pension mismanagement. But we've seen cases where employers deduct from employee salary and did not have their own to it, neither did they remit to the employee's pension manager. But in terms of mismanagement of the entire pension fund, we've not had any case like that. The one we had was not, the recent one was not under this contributory pension scheme, was under the old pension scheme. You know, so we've not had any. And I hope that we don't have any for a very long time. Okay, so FG borrowing from the pension fund, you know, so the way we invest, even the bulk of your money is already sitting with the federal government. I think I need to say this because we do more of fixed income compared to variable income. Now, under fixed income, you have the federal government bond, you have the state bond, you have the the corporate quoted bond. Okay, And the law allows you to do more of federal government bond. But the beauty is that you're only investing there. And the moment you are taking your money, and when to get it back. And that has been the case. Now, when this first came out, it generated a lot of bad blood because there is no trust between the people, between the governed and the government. You know, so it generated a lot of bad blood. You know, so what the government is trying to say then is this, that if you look at what is obtainable in developed countries, they are surviving on pension fund. Developed countries have been surviving. All the good things we enjoy when we go to developed countries have been on existing pension fund. So what they are saying is that the pension fund, whatever is left of it, should not be sitting there idle. It should be used, it should be put to proper use so that people can enjoy it. Because you're putting your money somewhere, you're not going to be able to access it until in case of loss of job or retirement, which is still a very long time to come if you're looking at retirement. Okay, so what the government is saying that instead of the money to not be sitting there idle, let's divert it to put it to good use, like housing projects and all that. But that is still ongoing. Because don't forget that one person cannot just sit down and take decision that will affect the entire pension industry. The pension industry is rested on an act, and that is the Pension Reform Act of 2004 and 2014. So before there can be any adjustments, they will first of all need to adjust that act. So they will still have to go back to the law before anything new can come in. We had the first act of 2004. We had the repeal act in 2014. You know, so, and there is discussion currently ongoing between the administrators and the contributors. So a lot of changes will still come up. But before any change can come up, they will still need to go back to the act and adjust that section of the act. Okay, so there's no serious cause for alarm as we speak. So I think that's all the questions, except if we have more questions coming in, I'll be glad to take them.
Good afternoon. So in a situation where the employer refuses to contribute his own 10%, how do we manage that, sir?
If you have an employer defaulting, what should you do as a contributor? The first thing, because we've had situations like that, okay, so I think I also advise that we should not be too quick to jump into the conclusion that, oh, they have embezzled my money, you know, but we've had a situation whereby the employer business was bad, the employer became incapable of contributing its own part of 10% and wrote to the commission and said, look, for now, we may not be able to contribute our own part because business is bad. And the employees were rightly informed. And we see whereby the employees will tell you that, okay, you know what, we understand that you've been honest with the contribution so far. So an agreement can be reached that, okay, I will pay my own part now. When business is good again, you can put your own part, you know, or whatever you guys agree, the employer and the employer can speak to the commission that for now we want to halt this payments into our employees' pension account, but everything has to be documented. But where the employer deducts from the employee's salary and did not add its own, neither did he remit the employee's own, that's fraud. Because what the law says is that the contribution must be made not later than 7 days after the payment of salary, which is assumed to be the last day of the month. So not later than the first week of the new month. So where that happens, such an employer will have to pay 2% interest on behalf of every employee that is deducted its money for that month. So the employer will not only pay back that salary, will not only remit the deducted fund, but it will pay 2% of the deducted fund on behalf of every employee whose money was deducted for the period that they did not remit. So what you do is, the first thing is that you need to first of all make inquiry from your pension manager to say, okay, please, I just want to find out if my employer remitted for this month. Okay, then since you have the mobile app, you can even check. But you may not even see it at times because the money may have been remitted, but the pension manager was unable to process, maybe because of no schedule or the value remitted is more or less than what is on the schedule that was provided. But the first thing you do is that you check from your own end. If you can't find it, you reach out to your pension manager, which you can do. You don't need the knowledge of your employer to reach out to your pension manager. No. So after that is done, and your pension manager was able to confirm to you that they have not received any contribution from your employer. So the next thing you do is to write to your employer. And if that does not resolve it, you have the right to send mail or reach out to the National Pension Commission. In fact, we have people we call recovery agents, as they are licensed by the National Pension Commission. Their job is to go around and see employers that did not remit as and when due. Then they will flag it, and they will be made to pay interest on every month, 2% on every month that they fail to remit when they are supposed to remit. Does that answer your question, sir?
Okay, we have further questions. Okay, that's going to be the last one. Yes, please.
What's your advice for some employee? Like in a case where the employer refuses and say, okay, they will use the employee contribution for both contribution. Like it happens to me in my former company, and I wrote a letter to pension, but to my surprise, they didn't even respond to that. After I left the place, I even sent a letter to them, but they didn't respond. So what is your advice to that employee?
So you cannot use, the law does not allow you to use the employee contribution as both the employee contribution and employer contribution. It's wrong. It's even honest to say, you know what, I've taken from you, let me remit that one. And it reflects employee contribution. Let me know that I am owing. But when you now deduct 10,000 from the employee, you now break it down. Employee 5,000, employer 5,000. That's fraud. No, that's fraud. So if that is what you have experienced, or if you notice that, you need to write the National Pension Commission. Okay? Or send mail to you've done that. Okay, so in fact, they have office here in Lagos as well, in GRA here. So I don't know what happened to your letter, that anything could have happened. So you can just go to their office here. They have an email. If you send mail, it doesn't happen. You write them, you doing no response. You can go to their office here. I think in GRA here, to make your complaint, and it will be addressed. I've seen situations like that, not once or twice. Yes, sir.
So this is just, speaking to some practical situations where you find that due to cash flow challenges, the employer is able to pay the staff the salary, but the pension payments are then made afterwards. You understand? So what is your position? I know the law says that it should be done not later than 7 days, but where in practical terms, the organization cannot do so because the cash flow does not permit, but makes sure that salaries are paid as at when due. What is your comment on that?
I think I spoke to this earlier, where situations whereby the employer is not able to remit its own part of the contribution, which is 10%. Now, from my own experience, what that employer did was to write the commission and say, for now, I am handicapped. I'm paying my employee salary, but I can't contribute my own 10% for now. You okay? Yes, sir. Yes. But not at the appropriate time. Yeah, so that's why I said the first thing you need to do so that you don't pay interest is to first of all notify the commission. Because if you don't pay 7 days after the payment of salary, you have defaulted. So you have notified the commission will give you, they will advise you on what to do. So don't just say, I'll pay 10 days after the payment of salary, or 10 days after payment of salary, okay? Or I will remit later. So the commission is there. You can write to the commission or consult the commission for a position before you take that decision. So that at the end of the day, you are not seen as a defaulter. So they have office in Abuja. They have office around now. You know, even in Lagos here. Yes, sir.
Thank you once again, Mr. Lanre Oyeneko. And I want us to please give him another round of applause for fielding those questions. Clearly, pension is very important in our lives. It's very important that our employers play their own role just as much as the employees play their own role. The employers in particular are expected to make the deduction. And as we have learned now, the employer is an agent of government when it comes to this matter. It's just a pseudo tax thing. So please, for all of us that are agency managers, please, let's ensure that we do not fall under the law. 7 days is what the law says, and within 7 days, let's try to make these deductions that have been made. Let us file them as appropriate. That's very important. Once again, I want to thank you, Mr. Lanre Oyeneko, for your submissions, for fielding those questions, and for ensuring that you are part of this training, which we have made available for all our members. Mr. President, it's now your time to please appreciate our facilitator for what he has done. If it's money, we definitely do not have that. But if it's something that will keep, that he will keep, so that he can think of us at all times, I think this is the time for us to do that. Immediately after that, or maybe Mr. President, can you just take your seat meanwhile, so that we can have the tribal question. The last one was won by Femi. Femi, if you want to, again, you are free to win. But I dare say there are lots of people out there that are willing to challenge you and ensure that you do not win this time around. Now, let the game start, please. Questions?
Okay, welcome again to this trivia session. It is important that as you go in this particular one, you use your real name that you've used on Zoom, so that should in case you win, we're able to match your name with the name you've used on Zoom and Menti. So again, go to menti.com, that's menti.com, and use the code you see on the screen. That's 629454 and 2. So we'll just wait till we get about 20 people. We have about 59 people online. We'll give everyone a chance to come in. Remember, as you're signing into Menti, it will ask you for a name. Use the same name you've used on your Zoom, so that if you win, we can easily match it with your profile. So we can do better than this. We have only 9 people. We can do better than this. And the moment we hit 20 or 25, we'll start. Okay, so the numbers are not going up. So I guess we can start in the next 1 minute. I'll just wait for the next 1 minute and we'll start. Okay, so let's start. So this is the performance so far. And let's go to the leaderboard. Yippee, I'm leading. I hope to win this. Okay, so we go to the next one now. Starts now. Okay, so let's look at the performance. Okay, so on to the next. And let's see the performance. So the dynamics are rapidly changing. And we go to the 4th question. Let's see the results. Good. On to the next question. Now this is the last grand finale. So his fastest fingers getting it correctly and the system will accumulate the results. Your time starts now. and then to our results. And we have a winner. The winner is Oriel Fair, leading with 4,060 points. Oriel Fair is our winner. Thanks for participating. Do enjoy the rest of your day.
But if you have to think a second time before answering, or think a third or a fourth time before answering, you just might lose out with time. Oriel Fair, once again, is the champion for the last segment. Oriel Fair, I want you to please send your full details, your name and your phone number to the chat box, please. Please do that right away so that we can capture you, recognize you, and make presentation of your gifts very, very soon. We've spent so much of our time and want to thank you for all the time spent. I'm sure we all have gained extensively. We all have learned a little more about taxation. We also have learned so much about pension. These are topical issues disturbing all of us as employers and as employees. And that's the more reason why Exman Training Department has brought this to you. We need to appreciate our last facilitator, Mr. Larry Oyenekom. And to do that is none other than Mr. President himself, Mr. Tade Adekunle. Please make welcome, Mr. President.
Thank you very much, Mr. Bola, for this COVID compliance. Before I do the vote of thanks, let me just use this opportunity to talk to our people that this year, let us keep hope alive. There might be challenges in this first quarter, but let us keep hope alive. We're into experiential marketing, and we should dip into our box and think out of the box for success for this year. On that note, this year, the Brand Experience Summit will still take place in July. Tunji Adeyinka is working tirelessly on that one with his committee. Our Exman Award and AGM will still take place this year, and that will be sometime in August. And so please, I also appreciate that we pay our dues for this 2021. The Financial Secretary will be reaching out to each and every one of us to pay, please. It's important that we do that and do that one. Then I've sent personal WhatsApp messages to various organizations on our corporate license with AppCon. If you have not done so, please do it. Send all the remaining documents to Mrs. Momo in AppCon. And for those who were not registered last year, please reach out to the Secretariat. We are still talking to the registrar to see what we can do. On that note, I thank each and every one of you once again for attending this training section. Mr. Ayo Elias will be reaching out to us, the chairman of the training committee, on subsequent trainings that will take place in March, April, or May. On that note, on pension, I learned one or two things, and I was telling our former president, Mr. Olageshi, that Keskese might be caught in this thing, that we are owing some money, and that so when we get back to the office, we'll see what we can do so that we will not apply 2% of what is not there and apply it again. So we really appreciate. I've learned very much from this pension training, very, very much. So we are really grateful to Mr. Oyenekon. But to do this presentation, I will call on Mr. Olageshi, our former president and trustee member, to make the presentation to Mr. Oyenekon. If I get COVID, matter, don't bother yourself about meeting this.
Mr. Oyenekon, please. On behalf of the ESCO and members of Exman, we are very delighted to present you this plaque and to thank you very, very much for a very wonderful presentation that shared so much knowledge and insights to us. Thank you very much. We're most grateful. Thank you. Mr. President, thank you very much.
Okay. Mr. President, the ex-president, and all members of Exman, I want to say a very big thank you for the honor you have given me to be the facilitator of this topic. And I want to assure every member and executive of Exman that I will always make myself available anytime you reach out to me again. Thank you very much for this honor. I appreciate it.
So we thank everybody from their various offices, from homes, for attending this training section. I hope all of us have learned one or two things from the tax perspective and also from the pension perspective. So please, let's apply some of them. And the subsequent trainings for our employees will also take place in terms of a strategy. That's the area we are looking at now, strategy, especially in this critical period. We want to look at the area of strategy, innovation, and creativity. And we believe it's something that will benefit from. So once again, thank you all. And the last one, I need to thank Abiodun Oshinibajo, Abelinis. Oshinibosi, sorry, forgive me. Oshinibosi, please, we are in Abelinis again. And all these facilities, all these gadgets, including the personnel, have been provided for ESMA pro bono. Once again, pro bono. Let us please thank him. I will appreciate if you, after clapping for him, let us send him personal messages of thanks. We need to thank him very much. Abi, thank you very much. Thank you very much. And all the staff, to all his colleagues, we really appreciate you. Thank you very much for accepting us, for receiving us. I know you have switched on the gen. Thank you very much for consuming your diesel, which we don't do anymore in our office. We live with it like that. So once again, thank you, thank you, thank you. And thank you all. And I also thanks also Mr. Bola Oyebade, the district governor of Lagos Ogun, Rotary International, for facilitating this program and for also securing for us the facilitators. We are really very grateful. We appreciate your contribution. Thank you very much. Let us appreciate him, please. Thank you very much, everybody. Do have a great month and a great year ahead.